Okay, it's 11 o'clock. We should get going on time this week. So I'll be talking to Sebastian Lyon from Personal Assets in a second. But as usual, I've got a bit of news to run through first. So if we start with that, so I pulled out three things, which you can see there on the screen. And we'll start with Baillie Gifford China Growth, which has been around now for about 4 years. It hasn't really covered itself in glory. It's not huge, only 132 million market cap. It's trading on fairly big discount for an equity fund, although it has got some unlisteds in there, so 13.7%. And it offers a little bit of a yield, but not much. Here we have some performance numbers and some stats to compare it to the competition. And you can see that the standout here really is the Fidelity China Special Situations Fund, but that has lost money over 3 years and really not made you very much money over 5. China has not just been a great place to invest for more or less most of the time that Baillie Gifford China's been around. And Fidelity Special is the biggest fund in the sector, and it trades on the highest yield. Obviously, the difference really between Baillie Gifford Fund and the other two is that it's very much focused on growth, and that, as we know, has also been problematic. So, as I say, it's been around for about 4 years. It used to be Whitham Pacific, and it got reconstructed in September 2020, and the new portfolio they said was now in place from the 7th of October. So what I've pulled out from Morningstar, and these are just numbers straight from there, is the returns on these three funds and the benchmark index, which is the MSCI China All Shares Index, since the 7th of October 2020. And you can see that none of these funds in NAV terms or share price terms has beat the index, which is not great. And the discounts have widened, which has dragged everything down. But Baillie Gifford isn't the worst performing fund here. It's actually the JP Morgan fund, which might be surprising. So because I think shareholders are very frustrated, what the board has done is introduced a new conditional tender offer. So the way that works is we're going to look at the returns of the fund from now until 30th November 2028. If the NEV doesn't beat the MSCI China All Shares Index, then it will trigger a 100% liquidity opportunity, so the chance to cash in all of your shares at a price close to NAV less costs, which obviously runs the risk of the whole thing disappearing, so effectively liquidating the fund. It's though quite a long time to wait. That's the only thing I would observe, really. They are going to be buying back stock in the meantime. It just really depends on whether shares are going to be patient that long. China's obviously tries to stimulate its economy, and that hasn't really worked yet. We're just going to have to wait and see what happens to this, but I think this might not be the answer to its discount problems. Chrysalis next. This one, all I've got here is the 6-month chart, and that's because we were just looking at what's been going on recently. And the discount has been narrowing. Obviously, that is a chart that starts at -30, so there's a long way to go yet. And you can see the NAV's been fairly flat over this time, but it's still trading on about a discount of 33%, which the way the maths works, if you close a 33% discount, it's a 50% upside of the current share price. So obviously, there is quite a potential there if they can eliminate the discount, and things are afoot that might help do that. So the NAV at the end of September, they said, is 141p, and already then they had quite a lot of liquidity because they've been doing some disposals. So Graphcore, we've talked about before, has been sold and the money came in. At least the initial proceeds of that come in. I think there's more possibly down the line. They'd also arranged a revolving credit facility and drawn that money down so they could use that to fund buybacks. but they had more than enough money coming in from Feature Space, because that sale had also been announced. It's just waiting on approval from some various regulatory authorities to get that done. So there's more than enough money to pay that loan back again. So they've got quite a lot of money, and they, really, they've done the first chunk of their capital allocation policy, which is to ensure they have enough liquidity. They were well into the next chunk, which is to buy back or to return £100 million to shareholders, and it only makes sense to do that through buybacks at the moment. So they started the buybacks on the 26th of September 2024, and they've bought back about £12.5 million worth since then. So we're way into that, but there's still quite a long way to go. And then obviously what happened this week was we got the news that Klarna's actually filed its paperwork for an IPO, which is something that we've been talking about probably for about a year, really. There's no detail yet on the size of it or how it's going to be priced, but things are all moving in the right direction for the business. So that they listed out, Chrysalis has listed out a whole bunch of stuff that Klarna had done over the course of the first half of this year in its update that it recently published. So they're quite big things, these. So be able to use Apple Pay, and actually just say, I'll use Apple Pay, but I'll defer some of that with Klarna. Is quite a big potential new source of business, as is linking up with Adyen and linking up with Xero. So you can make it easy for small businesses to put Klarna as an option into their packages. They've also got a funding agreement with Elliott, which will package up and sell on Klarna receivables in the UK. And they don't say how long that lasts for, but they do say that over the life of the agreement, it could be worth 30 billion in terms of funding for Klarna, which is really quite chunky. And obviously that's just in the UK. They can replicate that elsewhere too. And then they've also done another type with Apple where you can buy Apple products through Klarna. So there's like a sort of dedicated website, and they're doing this more and more with things. So all of that does look quite encouraging. And from that point of view, you can see the IPO going away, but much is going to depend on the state of US markets come the new year. And obviously that's going to depend on what happens with the new administration. But at the moment, markets are taking that relatively well. So well, the other sort of big thing to think about here, and also none of this is guaranteed, is that if the Klarna IPO happens, Chrysalis are thinking that there's quite a good chance that they'll get a decent NAV uplift as well. And they're going to have enough money to do all of that 100 million cash return. So that could be accelerated from where it's going now, in which case the discount could get squeezed quite materially. And I think shareholders would be a lot happier about Chrysalis's valuations if that comes in ahead of the NAV. So all of that is quite good news. And so because of that, they just reiterated that they are thinking about whether they can fund new investments. And I wouldn't have a problem with them doing that, provided that they obviously stick to this program, and they're not looking to sort of get out of this at all. So yeah, all good news really, I think. Last thing to mention from me really was AVI Japan Opportunity. That's a 3-year chart, and it's been trading fairly close to asset value for quite a long time. We've talked about this a bit already a couple of weeks ago. It's performing very well. It's the best performing fund in its sector at the moment over a year. And although it's behind the net value over 3, it's the best performing over 5 years. And so it's obviously trying to catch up. So what we've got this week is the details of the tender offer. So as they flagged, it's 100% exit opportunity, which I think is complete overkill really for this fund. But there we go. It's at a 2% discount to full asset value. So that means really, if you think we don't know what the expenses will be associated with this. So basically, whatever the cost of the tender are will get knocked off against the money coming out of the fund. But say that puts it back on 3%. If the discount is only 3%, there is no point in going down this exit route. So fingers crossed, if nothing changes in markets, there'll be absolutely no point of taking this up. But the record for that date for this isn't until 9th of December, so we just have to cross our fingers that nothing goes wrong between now and then. The shareholders will have voted to approve it or not on the 10th. If people do opt for cash, it arrives on the 23rd of December. If a lot of investors ended up ticking their "we want cash" box, then the first instance would be to create a sort of separate redemption pool. And so that would sort of create another sort of line of stock, and then that gets turned into cash over time. But if the size of the fund was going to drop below 50 million, then they would think about winding the whole thing up, which would just be ridiculous in my view. But there we go. Like I said, I don't think this was necessary, but they've done it anyway. So Tim has asked, what's Chris's stake in Klarna? And I haven't got that in my head, which is annoying. But it is his second biggest holding from memory at the moment. The amount that it owns of Klarna is not significant, but the amount with it in the portfolio is, and I go away and find that out quite easily, maybe later on in the program. So that's enough for me.